I'm guessing you've made it through the first phase of this series, which is to open a brokerage account. Next step, you want to buy stock, and you're looking to see how to do that. In this video, we're going to use E-Trade in an all-cash account to show you the process of buying shares of a stock. In this example, we're looking at Apple, and the first step is to determine your order type. There are several order types you can enter: buy, sell, sell short, buy to cover. Now these last two we won't get into too much right now because they deal with what's called shorting a stock, and that will be something we cover well in the future. For this instance, we're going to buy. First, we need to determine the quantity. Quantity refers to the number of shares we want to buy. If you want to base your quantity on dollar amount, there's a lot of calculators out there, or you can just whip out your cell phone and do the math. But basically, if you wanted to spend, say, $1,000 or something small like $5,000 a trade, it would tell you how many shares you can buy for that amount of money, and it will always round down. So even though it's 44.72, this will round down to the closest whole share amount. In this case, let's say we want to do 100 shares of Apple. Next step is price type. What are price types? Let's go through them. You can do market, which is basically a buy or sell at whatever the price is. You say, okay, well, I want to buy up to 1,000 shares at whatever the market price is, put it out there. Okay, great. They're going to fill your order, what's called fill your order, or give you that stock at whatever the most current share price is in the market for that stock. So in this case, the market may give you $111.80.06 per share. Market on close is basically you saying, I want to buy 1,000 shares as close to the close of trading as possible. Next is going to be limit order, which you're going to buy a security at or below a specific price, and this can be used for selling as well. It's like saying, okay, well, I see that it was 11,800.06. The bid is 11.80. The ask is 111.81. I'm not willing to pay 111.81 because it's at a premium to this price. I will be setting a limit for 111.80 for 1,000 or for 100 shares. That is the limit you're willing to pay for it. The limit refers to the highest price you're willing to pay for a security. Stop on quote, buy or sell a security when its market price reaches a specific stop price. When the security's market price reaches the stop price, the order is triggered and turns into a market order. Stop limit on quote is to buy or sell a security when its market price, ask price for buy orders, bid price for sellers, reaches a specific stop price. When the security's market price reaches the stop price, the order is triggered and turns into a limit order. Trailing stop dollar is to buy or sell a security when its market price reaches a trailing stop price. The trailing stop price is initially specified in terms of points, stop value dollar, above or below a security's market price. The trailing stop price is automatically adjusted as the market fluctuates. And if you select a trailing stop percentage to buy or sell a security when its market price reaches a trailing stop price, the trailing stop price is initially specified in terms of percentage, above or below a security's market price. Quickest and easiest way that I've found is either setting a limit or a market order. If you think the market is offering a fair price, market orders are the quickest way to buy securities. If you think that a stock is a little bit overvalued, you would set a limit to the highest price you're going to pay. Now, I will say this, in terms of penny stocks, many stocks will limit you to actually using limit orders. So when you're looking at a stock that's being actively traded, make sure you know if you can or can't place a market order to buy, or whether it's restricted to just limit orders to buy a security. In this case, I think that the market 111.81 is a little overvalued. I'm going to select a limit order and say I'm willing to pay $111.8009. So just under the offer, just above the bid, which assures that I am the most accurate price above the bid but below the offer. I'm still buying it at a quote discount, and I'm going to make the term good for the day, which means as long as the market's open for the day, if the stock price hits this limit, I will get filled for the amount of shares that they're willing to fill me for, which I'm hoping is 100 shares. Now, there are also other terms. You can do it for good for 60 days. You can do it immediate or cancel. Let's check out what all of this means. Good for 60 days, obviously self-explanatory. It's good for 60 calendar days or until it's fully executed or canceled. Immediate or cancel specifies an order that will be immediately filled entirely or partially or totally canceled. Fill or kill specifies an order that will be immediately filled in its entirety or totally canceled. So if there aren't 100 shares available at that price I want, my order is going to be killed or canceled. Extended hours, good for the day, specifies a good for the day order that is eligible for execution during the regular and extended trading session. So before 9:30 and after 4 p.m. Are considered extended hours. Extended hours, immediate or cancel, to specify an immediate or cancel order that is eligible for execution during the regular and extended hour trading sessions. For me, I'm going to put good for the day. And once you preview your order, it'll say, okay, preview, estimated commission, estimated total cost, your price, and then you place your order and wait for it to get filled. In most cases, you can go to your accounts tab, you can go to your portfolios or your orders and see what orders are pending at any given time after you place them. And as always, if you ever have questions specific to a certain broker, you can always give them a shout. Customer service has been great, especially through E-Trade. And that's pretty much how you place a buy order.